Hi, Kieran. Yes, I'm a little bit surprised by today's Reserve Bank decision. I was expecting them to raise interest rates by 25 basis points, but instead they've kept the cash rate on hold. So yes, I'm joined here by Besa, Deda, the Chief Economist at St George Bank. Besa, what were you expecting today? Were you expecting rates to be on hold?
We did anticipate that the cash rate would pause today, and that's exactly what they delivered. And one of the key reasons was we felt that with economic data really suggesting that the economy is slowing, particularly in terms of retail spending, that it was time for them to pause and assess the incoming data and wait for the next inflation report in late April, the one that is quarterly and the one that the Reserve Bank focuses on.
So do you think they will now raise rates in May next month? With inflation currently at 6.8% in February, it's still pretty high.
I think a key determinant will be that quarterly inflation report that the Reserve Bank focuses on, and that is out in late April, so they'll have the benefit of that report in early May. They'll focus on that trimmed mean measure, which does dampen the impact of volatile price movements. We're pretty confident that inflation peaked in the last quarter of last year, and if we take a look at the monthly inflation measure, that's come down quite sharply, from 8.4% in December to 6.4% recently. So there's good signs that inflation's coming down, but the board could well assess that come May, inflation's still too high, but we do think there's a growing risk that perhaps we are at the end of this cycle.
Yes, since the previous rates decision in March, we've seen some big bank collapses over in America and Switzerland. How concerning do you think those have been for the Reserve Bank and our banking system here in Australia?
Well, firstly, Australia has a very strong banking system, but obviously it's created a lot of turmoil and volatility in financial markets. And there was a period of pretty heightened fears of contagion in the global banking system. Some of that has settled down. I think it does mean that financial conditions have tightened in the US, and the US Federal Reserve may not have as much tightening to do. In Australia, it could mean that financial institutions down the track might face modestly higher funding costs. However, on balance, I think probably the domestic factors were what steered the Reserve Bank to keep rates on hold today, particularly the four indicators that the Governor explicitly called out in his speech after the board meeting last month, and that was retail spending, the labour force data, the monthly inflation data, as well as the business survey. And on three or four of those, there was a slowing. The unemployment rate dropped towards 50-year lows, but then forward-looking indicators of jobs are showing a slowing in employment growth.
Yeah, we'll get the next month's unemployment figures next week. March unemployment figures next week. Are you expecting the unemployment rate to start ticking up throughout the rest of this year?
We certainly are expecting to see the unemployment rate move higher through 2023. There is a very big ramp up in labour supply from net overseas migration, which is recovering very rapidly, but also the slowing in economic activity is starting to have a bearing on labour intention plans by companies. So we're seeing the number of applicants per vacancy rise, we're seeing job ads come off, and also we're hearing from our customers that they are considering redundancies and making layoffs, and some of that's already in train.
Do you think the Reserve Bank's done enough to avoid a recession for Australia's economy this year?
Look, our core view is not that there will be a recession, but we're certainly very close to it. Certainly if they were to raise rates again this year, I think that could well be a very close tipping point for a recession, because we have to bear in mind that monetary policy does have long and variable lags. And I think that's another factor that the Reserve Bank is very cognizant of today. There's 880,000 loans that will expire and move to a variable rate from a fixed home loan rate. And that means that the cash flows of those households will be impacted and possibly slow spending further through this year. And so I think we've got to keep in mind those long and variable lags.
And cash rate cuts. I know it's only April, but is there a chance we might see the Reserve Bank cutting interest rates at the end of this year or early next year?
Our group view is that rate cuts will emerge early next year. Certainly, if you have a look at interest rate pricing, there are already a chance of a rate cut priced in from July of this year, and almost a rate cut of 25 basis points, or 0.25%, almost fully priced in for December of this year. So certainly the markets think it's a real possibility. We wouldn't rule it out for this year, but our core view is that it will occur early next year.
Yeah, and Governor Lowe, he is speaking before the National Press Club tomorrow. Are you expecting him to just talk about where the peak of the rate cycle might be for Australia?
I'm expecting him to continue to talk tough on inflation. So even though they've paused today, I don't think he wants to see an acceleration in activity that will then generate further inflationary pressures. So I expect tomorrow will be explaining about why they went on pause, but also continuing to talk tough on inflation, and that is being prepared to tighten or hike rates again if inflationary pressures are too elevated or showing signs of a reacceleration given the pause today.
Yes, so interest rates here, 3.6%. New Zealand, their meeting tomorrow, cash rate there could be lifted to 5%. America, it's at about 5%. Is there a worry that we're getting left behind the rest of the world here when it comes to the cash rate?
No, I don't think so. Our cash rate decisions are based on global factors, but also increasingly on domestic factors. And if we have a look at the inflation pressures in Australia, whilst elevated inflation is a common problem across major economies around the world, our rate of inflation growth is not to the same heights as what the US is experiencing or the UK is experiencing. And also, critically, wages growth in Australia is only 3.3% per annum on the favoured measure by the RBA, which is the wage cost index. And in the UK, in New Zealand, in Europe, that's higher. And so I think there are a different set of circumstances, not completely, but enough to enable the RBA to go on hold.
Besa, Deda, thanks so much for your time.
Thanks so much, Ed.
Well, there you have it, Kieran. Rates are on hold. We haven't had a cash rate hold since April last year, so it's been quite a long time for our economy. So rates at 3.6%, but I guess there is a chance they could lift later this year for the RBA if they want to keep bringing down inflation.